Good evening and welcome to another ACY Securities webinar. For tonight, we've got a few different topics that I'm going to be trying to cover. I'm not sure if we'll get through absolutely all of them, but I'm going to do my best to ensure that we get to have a look at your charts and, of course, having a look at some of the things that might be going on in the market. So to get started, first thing is my name is Alistair Schultz. I'm the Chief Market Analyst for ACY Securities. And so far, I've got very close to 16 years of experience trading financial markets. And that's included working on the trade floors of New York. I've also spent some time in a variety of other countries and institutions, ranging from the boutique style investment fund all the way through to institutional size funds, as well as brokers in addition to all of that. From there, I've done a lot of coaching over my time as well. I would have very, very close to somewhere in the realm of triple digits for students that I've taught over the years. And I think my most prominent student has probably been Tim Cahill. And I've done a lot of things on sort of the TV circuits as well, with regular guest appearances on Ausbiz TV. And I've been featured in quite a few other financial entities. So, you know, if you do want to see or check out any of those things, then feel free to look them up. You'll be able to find them pretty easily on Google these days. But to move on from here, there are a couple of things to sort of go through. Now, first of all, if you do want to get in contact with me throughout this session, I recommend you use it through the Zoom function. If you're one of the guys that are watching from YouTube, then unfortunately, I'm not really able to sort of look at all of the different chat functions that we do advertise and go through for these webinars. So if you can leave a comment instead of actually leaving in the live chat, then I'll be able to answer it for you. And of course, you know, you're always welcome to join in on the Zoom side of things. In which case, if you are on the Zoom side, then you can simply use the chat box. Now, in order to use the chat box, you've either got an option at the very top of your screen, where if you hover your mouse above it, you'll see the chat function drop down. Alternatively, you can hit Alt-H on a Windows computer, CMD Shift and H on a Mac, or Command Shift and H on an iPad. Any of those functions will bring up your chat box and you're able to send me a direct message. Now, if you do have a question, don't worry about holding back, just send it straight through. And if you have a chart that you want me to have a look at, perhaps you want a second opinion, or you want another set of eyes on it to have a look from a technical perspective, or perhaps you just want my fundamental thoughts as well, feel free to put them in. The earlier you put them in, the easier it is for me to sort of navigate the list of things that we're going to be going through. So, you know, please do them as early as you can. Of course, if you don't have one, don't worry about it. I will be going through a couple of charts tonight anyway, so don't fret too much. Now, to get on to the next steps, today's agenda, I did say we had a little bit to cover. I don't know if we will get through everything, and the Microsoft and Discord stuff is probably on the back end of that. But otherwise, I was planning on covering and having a bit of a chat about what's going on with this another $1 trillion package coming forward, and to sort of explain some of the discrepancies or differences that are in it compared to what we've been seeing with the stimulus or COVID relief packages that have been coming along. And not to get too hung up on all the deals with it. Of course, we're going to have a little bit of talk about US yields and the US dollar, and a little bit about New Zealand and the housing market and what we've seen in terms of pricing in the last couple of days, especially with the new changes that have gone on and how it's affected the New Zealand dollar as well. And so that's really kind of the gist for tonight's agenda. Now, to move on to the first bits. Now, I do have to give this a risk warning. Anything that's in this webinar tonight isn't to be construed as personal financial advice. It is just generalized. I'm looking at everything from my own perspective. So I'm not sure of your financial situations, and I obviously couldn't comment on that. Now, as a side note, in addition to all of this, if you are new to trading and this is your first webinar, or perhaps you are newly just getting into it, then you know there are three sort of things that I like to always consider. And one is the objective of my financial instrument, or what I'm doing with the money. Of course, what I intend to get out of it is the big question, or the big marker in that. As well as that, I also look at my own trading experience levels, and I like to consider what my level of risk is as well. You know, what profile do I have for that? Now, if any of those three things sound like something you haven't considered before, then I would advise that you would go and seek some advice. Of course, if you're not 100% sure on where to go and look for those sort of things, let me know and I can point you in some of the right directions to sort of deal and try and find people to help you with that sort of scenario. Now, to get into it and get started and underway, I'm just going to bring some charts up for us to have a look at, and we're going to have a quick look at the calendar as well to get an idea of what's going on today and obviously a little bit later on what's happening tonight. So here's the calendar for today. Now, we haven't had a huge amount. I might just make it a little bit small so we can see a bit of everything. Now, Monday, we didn't get too much action. Today, we've had the Fed Powell speaking this morning. He's really not had a massive effect. We've all heard the news that's come out. He's basically said that, they are looking at, dealing with the Treasury side of things. They're not going to be changing anything in terms of rates or moving anything in that sort of way. So at this point, he's basically said the economy is starting to get back on track, but there are still some significant challenges to face going forward. So whilst we've got good economic data coming along, we've still got a long way to go. And that's effectively what they're sort of making at this point in time. Everything outside of that you can see already is a yellow indicator, which means that it's a low impact news event. And that's effectively been the scheme of things today. The most important thing that I've really been looking for has been what's happening with the UK unemployment rate. It's sat at 5%. It was forecast to actually increase by 0.01. It's actually ticked back down. So that's a very early indicator for us, even though it's a lagging indicator. It's an early indicator for us to sort of say that we are starting to see the economy in the UK get back into that recovery mode. We've seen plenty of vaccinations going out. We want to keep this happening for them so that they can keep opening up. And obviously, this is probably a good news for the pound, because if we were to do it in comparison to what we've seen in Europe, it's the very opposite scenario where we've got mixed numbers of results coming along from the virus side of things, rising virus cases, new lockdowns being implemented in Germany. And as contrast, UK, they're starting to ease those lockdowns and get back on the ball of things. So they're all sort of important things to consider, and we will have a bit of a think about that tonight. Now, outside of that, we've also had a couple of members from the Monetary Policy Committee talking. I didn't pay attention to these yet because one's happening in about 30 minutes, and the other one isn't until about 9 o'clock tonight. Now, for reference, these guys don't have too much for us to really think about or talk about. They are likely going to be talking about what they see as some of the risks and challenges for the Bank of England. And of course, the big one for tonight is probably going to be the Bank of England on Governor Bailey speaking a little bit later today. So he's generally thought of as a pretty well-rounded guy. And you can see already, like what we're seeing from the description of what he's going to be talking about tonight. It's an online event hosted by The Economist, and they're going to be talking about the unlocking investment for net zero. So I have to take a punt at that and say that they're probably going to be looking at the idea about how they're going to get the central bank back to $0 and what it means for that net zero financial side of things. So, there's a little bit going on there. Again, we're going to be hearing from Fed Chair Powell at 1 a.m., but this is going to be a different one because in this one, we're actually going to be seeing Treasury Secretary Janet Yellen and Federal Chairman Jerome Powell both talking at the same time. This will be the first time they sit next to each other, and they're going to be discussing the fiscal side and the monetary policy side of things. So, there's a fair amount to unpack probably in this event tonight. Not entirely certain what he's actually going to be saying from it, but it's likely going to be talking about the idea of how stimulus policies have sort of helped recovery. And where they're looking for the future is really what we're all going to be locking into listening to. We want to be seeing if there's going to be any new details that might suggest we're going to be getting some new stuff happening, or if he has new things coming out that might give us a little bit of an insider to the bank, the Reserve Bank of America. Now, of course, we have several other things going on a bit later on. Early 5 a.m., 4 a.m. sort of period, we've got these ones here. Again, FOMC members, we've got Brainard and Williams. Brainard speaking a second time a couple of hours later. At this stage, I'm not going to be focusing on those. I'm not going to look into them. I'll have a look at what they say, recap them in the morning, but I'm not going to get up to listen to these guys at that time. I do like listening to what Brainard usually says because he's known to have usually some quite impactful speeches. But around, considering we've already had the Fed policy minutes or not minutes, but the announcements last week, plus we've heard from Fed Powell twice. That's probably enough to take. These guys are going to be sharing almost notes together with one another to a certain degree. So we can probably discount having to be up until that sort of time, but maybe the 1 a.m. one is definitely worth keeping an eye on. Now, getting into some of the charts and having a bit of a think about what's going on today. Realistically, we've seen a bit of an interesting day. I'm just going to open up a couple of new charts for us to sort of be looking at. The first ones that I'm really going to be paying attention to are the Asian stocks. We've had a little bit going on here today. Most of them have sort of had a bit of a slip back down, purely because they've been seeing a bit of issues with the Treasury side of things and the US dollar increasing. So, we'll flick these across. I've just got to wait for that to move again. There we go. And we've got them on the hourly now. So the Singapore 30 has sort of pumped itself up a little bit, but not too much. We've got the Hong Kong 50 down, and the JPP or the Nikkei is also down. Now, effectively, traders have had a bit of a mixed day today. We've seen these Asian stocks sort of all come down. We've also seen the dollar index having a bit of a ride up today. It's not a massive one. It's we're sitting within the normal range of things that we've seen for most of March so far. So it's not anything outside of the ordinary. It's kind of sitting in the middle, if you will. But even so, we're really looking at this idea that traders are sort of monitoring the setbacks in recovery from the pandemic sort of stuff in Europe, and they're bracing as well for, we've got US 7-year Treasury auctions this week, and last time we had those, there was really poor performance. So, this is going back about a month ago that we had them, and the performance was just abysmal, and it's probably been one of those areas that has people a little bit on edge. We've also seen, a variety of other indexes hitting red. The CSI 300 out of China is nearing its absolute year-to-low date. We've seen US and European futures retreating from overnight rallies that we saw out of the US side of things. So, there's been a little bit of a drop in some of the long-term borrowing costs for the US at the moment, and that's because we've seen a 0.04% drop on the yields for 10-year treasuries. So they were, I believe, sitting up in the 1.7. They're now at like 1.675% or something very, very nearby that. And so we've ended up with the NASDAQ pushing itself a little bit higher in today's session, and the S&P 500, which has done very similar sort of things. Now, I'll bring that up for you so you guys can get your eyeballs on it as well. And where is it going? I'm blind. Not in there. Maybe it's here. There it is. There we go. And so the S&P 500 has had a bit of a mixed result. They have seen some half reasonable results today for most of the pairs the companies that are within the S&P 500. Obviously, at this point in time, we're sitting a little bit lower at the very, very sort of section. But realistically, the big performers of the day have been related to the technology companies at the moment. The 10-year US Treasury yield is really being the focus at the moment. It's subsided a little bit. It was at the highest it's been in 14 months, which was giving us a little bit of hope for improved demand for this week's sort of round of sales on the Treasury auctions. But that's not been the case. The offerings this week are really, whilst they're all there, the 7-year note is one that's, like I said before, been quite poorly looked at. And right now, they're really worried about the demand side of that. So if we see, when it did fare poorly, we saw the benchmark yields we saw the yields on other benchmarks sort of push much higher because there was more demand for those than there was in that one. And generally, you like it to be a little bit even across the board. You can deal with a few discrepancies, but not one where it's abysmally bad in one and the rest are seeing a much higher push up. Now, for oil as well, we've seen a bit of an interesting day. There's a little bit, I'm starting to see a little bit more speculation on the side of this new futures contract that's coming out. Merben, I believe they're called. And we've effectively seen, I might just put this in candles, might be a bit easier for some of you guys who might not be fresh with each of those. And that's sort of starting to weigh a little bit on it, I believe. We've also seen less demand out of New Zealand, not New Zealand, Europe for aviation sort of stuff. And it's still obviously not international travel yet. So, whilst we're seeing these prices sitting up quite high, or have been sitting quite high, like if we put it on a daily chart, get a bit of an idea of where it's sort of sitting in the scheme of things, it's come up to $73 in the last couple of weeks. And that's not, I think that's probably a little bit too high. I've always been a bit of a bull for oil for the last 12 months, but at $73 a barrel, I sort of sit there and go, really? And particularly when there's still more to come for it. Now, the other parts to sort of look at, we've seen, and this is probably just a very brief recap before we sort of go into it, to give you guys a bit of an idea of what we're going to be talking about when I talk about New Zealand. New Zealand's currency has had a bit of a rough year so far. They were doing quite well, but the government has sort of stepped in and intervened to control some of the property prices they've got going over. They're seeing property prices like surge out of control. So they want to try and cool it down a little bit and keep it affordable and all those sort of things. And that's not really been gone to plan so far. So there's a little bit of speculation right now that we might see some more stuff out of the central bank. Now, to get started on the good stuff. Now, we have seen, and this is where we've seen a little bit of the US dollar seeing a bit of an appreciation today, outside of, obviously better domestic sort of runnings going on in general for the US economy, with good data coming out. We've had some pretty good speeches coming from the Federal Reserve. And I think the big one is that the Biden administration is looking at the very next economic plan already. So this is, very, very early days. We've only just seen a $1.9 trillion pandemic relief bill signed earlier this month. And now they're already talking about another one that could be as much as $4 trillion, but as small as about $2 trillion. So most people are sort of going, well, let's cut it in the middle and call it $3 trillion to measure. And the idea is this is not going to be a sharp, hard, fast $1.9 trillion plan. So I want to make that very, very clear early up. The talk on the town already is that, the proposal is going to be presented sometime in the next week or so. And it's, whilst, people aren't wanting to put their names to things at this point in time, it's all going to be about infrastructure and climate change, which have been long-standing things that Joe Biden has been talking about wanting to get in the way. So the program's likely to be actually categorized into 2 or 3 different channels. We're not going to see the full $3 trillion dumped, or $4 trillion, however much it ends up being, dumped in one go. It's going to be a case of, addressing the infrastructure and climate change side of things. They're also going to be looking at human capital. So that's going to be like tuition fees, healthcare initiatives, aged care, childcare facilities, all of those sort of things. And I suppose, unlike that COVID-19 emergency spending program, which the key word is emergency spending, it's going to be a much longer term proposal. So this might be $3 trillion over, or $4 trillion or $2 trillion over sort of 3 or 4 years. And I think that's the big distinguishing. It's not going to be just this pump and dump, all of a sudden markets fly up. It'll be something that takes over time. Now, one of the things that is going to be of notice in this one, the previous ones that we've seen with stimulus bills, taxation has been, usually we've seen cuts, or we've seen things that benefit people that might, be paying high levels of tax. This time round, it's looking like corporate taxes and rates for the wealthy are going to be central components to it all. And so far, speculation suggests this is going to be the biggest tax increase since the 1990s. So if you remember what was going on in the 1990s administration and how big some of the tax increases that were going in at that point in time, expect it to be bigger this time around. So, I don't think it's a matter of people getting worried about the taxation side of things. It's coming. So no matter what we look at, that's going to happen. Obviously here, me being in Australia, like I don't worry about it too much because it's not going to be affecting me directly from taxation side, but from a market side of view, this is probably going to give a little bit of concern to a lot of people, including the Republicans, who will generally try and avoid going on that figure. And I imagine that's going to be a sticking point for the indefinite future for them. They're likely going to have to break up this package into multiple legislative parts because putting it all in one package is just going to be very, very difficult to do. And I would expect it to be more than one package no matter what, given just those legislative challenges. But putting everything into one reconciliation bill, it's going to allow that. It needs to allow for a simple majority vote in the Senate. Getting a 50-50 split on that front is going to be way too difficult for them, given how far things can be included and changed along the way. So we've already heard from Mitch McConnell, who's basically said, we're not going to go for anything on massive tax hikes, particularly, and his specific word was, when it's wrapped as a Trojan horse. So, that's not going to be an easy one for them to get past, and this is going to be something that we're going to have to keep an eye on for a while. Now, if it is pushing towards some of those environmentally friendly options, and they're going to be looking at a few different things, then there are some different markets that we're going to have to consider. Obviously, if we go down in here, consumer cyclicals are probably going to be big on the priority because these are the markets that have had a bad run this year. So when I say consumer cyclicals, these, you can see what kind of companies are. These are ones that are kind of discretionary. These are ones where consumers will actually buy and deal with products directly because they feel that there's a need for it. And quite often, these are the areas of the consumer side that sometimes I go, oh, we don't really need that. So that might be goods from Amazon, or it could be holidays. It can be a variety of different things. The other elements will be sort of some probably in somewhere and around the Walmart. We're already seeing things in this area going up. Costco, Walmart, anything with online and e-commerce spending, particularly with stimulus bills. Financial services will probably get a little bit of a boost because people will want to be trying to get loans to come along. But the big ones are really going to be in the energy sector. Now, I actually think that we will end up seeing anything that's in this area here right now not actually go up. If it's a green environment, think, the environmentally friendly option for energy and the infrastructure side of things. So people who build and manufacture R&D departments, they're the ones that are going to be get a benefit, not so much fossil fuel related energies. Healthcare is probably going to get a bit of a kick, particularly being that there is, if you were to look at the Obama administration with Obamacare and all those sort of things, and how Democrats usually run things, there'll be some sort of push towards trying to get everyone the health care that they actually require. So expect to see some boost and benefit hitting in this area. Outside of that, I'm really sort of going to be focusing my attention on perhaps some of the more innovative companies that are dealing with stuff like solar panels and all of those sort of varieties. So if you've got some in mind, shoot them through, let me know. I'll have a think about them and give you a bit of an idea on them. Alternatively, have a think about them yourself. Think about what areas might actually provide you with some level of improvement, or what might improve, human life, as an example. So, that's one element to sort of think about tonight. I do think that when we look at what's going on, we're already seeing that the dollar index is rising. Right now, it's had a bit of a pullback. It's not going anywhere. Obviously, unless we're trading a futures market, we can't trade directly on this dollar index. This is really more of a snapshot for us to have a bit of an idea on where the US dollar is specifically. So, taking into account we're seeing this rise, it's no wonder that we've seen sort of some of our other charts today sort of heading on the south side. So, here we are with the Aussie dollar. It's continued to move down today. We've seen the pound, similar sort of effect. It's had a bit of a rough start. It's been sideways most of the day, but more down than up. You've got more times touching the lows than the highs. And New Zealand dollar has had a bit more than just the US dollar to deal with and contend with. It's also dealing with what's happening in its own sort of market. Now, other things to sort of look at this front, we could look at the euro dollar, we can look at The dollar yen, we're likely going to be seeing a bit of weakness. Not so much weakness in the other currencies, more strength in those ones. Perhaps unless you were considering perhaps the euro, which is kind of got a bit of weakness at the moment as well. So keep those in mind for your trading days ahead at the moment. Now, whilst I was speaking about New Zealand before, this is probably not a bad time to keep it wrapping in. We've got the New Zealand chart up, all those sort of things. Now, effectively, New Zealand's government is worried about property speculators. So they're looking at a way to try and tackle what we would consider to be runaway housing prices and prevent the formation of a really, really big bubble. So at this point in time, what's been said, they're removing tax incentives for investors to make speculation less lucrative. And they're going to be unlocking a whole stack of what you would consider to be crown lands to try and increase housing supply. So it's something that's going in. They're trying to increase the total amount of supply of property to stop people from being able to just speculate, and only people who already own a house buying houses because they have the wealth. So they're putting in incentives and all sorts of things to allow people with lower incomes to be able to try and get into the market as opposed to being stuck in a renting cycle. But that does bring up some other problems. The last thing you really want is to have a dangerous housing bubble, of course, but you also they're almost kind of putting that into the same, almost building another one by saying, if you're a first home property owner, instead of it being a housing bubble, you end up with something that might be more financial bubble related. But from, some of the data that I've seen so far, apparently about 15,000 people in New Zealand who already owned 5 or more homes have bought more homes last year. So they've had a record number of purchases going on. And when you consider that the population of New Zealand is about 5 million, as a maximum, that's a lot of people, who owned 5 or more houses and were able to buy a 6th one in last year's sort of running. So, whilst the New Zealand economy is seeing this awesome tick up and running back up, they've put this worry all around the sort of housing side of things. Now, unfortunately, just because they've spoken about housing markets being a bit of a problem, it's raised concerns for the inflationary side. We've seen prices sort of rallying up on this side. They go, oh, well, is this related to inflation and the value of our dollar and all those sort of things? So it's now put, this question in place of, are we going to be seeing interest rates starting to get tapered? Are we going to see some of those stimulus packages that were implemented last year tapered off? And everyone is getting a little bit worried about it, probably a little bit OTT, but at the same time, I can understand where they're sort of coming from. So, whilst we can't sort of, whilst the government is trying to curb the housing demand, they're also trying to increase the supply, and it's being sort of constrained from the planning and the high construction costs. So, you would easily be able to establish that, it's a bit of a problem for them to move forward. And naturally, the biggest one that we're worried about is, are we going to see an interest rate change from the New Zealand, the Reserve Bank of New Zealand? Now, from the stuff I've seen, Governor Orr, and what I've seen sort of on their addressing of that today, they haven't speculated. They haven't said that they're going to do it. There's been no silver bullet move that they're going for on this front. But there's, this is the thing. Whenever you do hear this sort of stuff, can you count it as jawboning or not? Personally, I think we can say that they're probably not going to be tapering off anything else, especially after big changes to the property market. They're trying to target the problem directly, and there's still other issues within the broader economy. So I don't think that we're going to see that. And so in limelight of that, I still look at the New Zealand dollar as probably being able to rise a little bit higher. We've been seeing some good dairy exports sort of going on recently, and that number's only going to get better as more economies get better as well. And so we're going to see sort of some continual growth on this side. Now, bearing that in mind, let's have a bit of a markup of a chart because we haven't gotten around to that just yet. Now, when I look at the New Zealand dollar, 75 cents is my play territory and has been for years. Anything up around the 75-cent mark is probably getting to a point where they don't want it to be, much like Australia doesn't like our currency at the 80 cents and above line. So, I'm looking at these as the sort of two main areas to sort of be playing with. Outside of that, we've got one right kind of through the guts of price, sitting off sort of this line here to contend with. And this is really where price sort of tends to hover around. We could easily put one on this side as well and change the color of that one just to make it obvious where we're sitting. And this is sort of where we're at. And you can see we've kind of got two separate areas of resistance and support operating. And right now, these are our two main focal points for them, especially considering how quickly the jump up has been in the last 2 or 3 months. So that's the first elements to sort of take into account. There's a travel bubble likely going to be opening up. We've seen a boost on between Australia and New Zealand. Then there's the obviously they've already their economy is almost is at the same sort of pace that Australia is sort of at as well. So all of those are sort of positive things. But the biggest issue for both countries is really immigration. Without immigration, population growth stays low. And so once those international sort of borders start to open back up, then we're getting some differing sort of scenarios and hopefully some better results at that time. Daily chart, right smack in between these two. Yes, we've got a pretty big range of 763 pip on this one, but we can even narrow it down a little bit further. I'm sitting with a bit of a happy line at this point here for a support line as my next sort of targets. And this is not that far away. This is 70 pip away from where price is right now. So if I see price coming down much closer to this line, then I am looking at this as we've got multiple areas of support beneath us. If we get confirmation from the RBNZ that says, hey, we're not going to be tapering off anything, then expect to see the New Zealand dollar have a bit of a drum back up, and probably quite quickly. I mean, just in today alone, it's done about 100 pip. So we can easily see it turning around and heading on the right direction from that path. Right now, very choppy pricing in between all of this. That is the New Zealand dollar categorically, no matter what. So I tend to focus more on the fundamental analysis side for the New Zealand dollar than I do on the technicals, though technicals do still apply. If we were to zoom in on the 4-hour chart, lines-wise, we could easily move this one up to here as well, and we could put one on the top side as to give us a little bit of a guesstimate range to sort of work with. I don't like the top one as much, just because it doesn't fit that well. The bottom two, these two green ones, I actually don't mind. This one here is obviously where we're sitting in right now. So expect to potentially see a bit of a bounce off this south side if it does continue to fall. And then, look for it to try and test this barrier as well on the way back up. So there's where we're sort of sitting on the 4-hourly. Hourly, we don't get much more information out of that. Today has just been a pretty steep run for them all day. You can see just how harsh it's been. This is actually a double top pattern. So like I was saying before, with patterns still working, technically this still works for us. And it's certainly done more than 100% move. 16 pip was, at this point here, was what you would call a 100% price move. And it's certainly gone well and truly above and beyond that with a further 85 pips. So if you were watching that yesterday, you may have been able to catch on, but it's obviously been the news today that has been the greater impact. Whilst the technicals and what we see in price does give us good indicators, the fundamental side has really played out its part today. Now, shorter time frames, 15 minutes. Again, it is just straight down. There's not much I can really say about a chart that's just heading in one direction. So, but hopefully some of these price points are put in place. You can see that price here got held up a little bit by our line before. So this is going to be somewhere for us to look at in the future, right on the sort of 70 bit in around that 70 cent mark, a bit above 79.62 is what we've got on the screen right here. So anywhere around there is obviously going to see a little bit of support. The next place support above that is going to be here at the 71,400 range, where it's been held up before and where we've got a gap in price as well. So bear both of those in mind for the day ahead. Now, the other one that we were going to have, we can look at a couple of other things, but I thought we'd take the opportunity to have a bit of a look at Microsoft. Now, the news for Microsoft in the talks today, $10 billion they're offering to buy a company called Discord. Now, if you're not familiar with Discord is a video game chat community. And $10 billion is a pretty big number. And they've been really Discord has been talking to a number of different potential buyers, but software giant Microsoft has been in the running for a while. There's no deal that's imminent, and I want to make that clear. This is entirely speculative. But whilst that's occurred and the discussions are private, Discord is more likely to try and go public than what it is to actually sell themselves, because they actually have a pretty good product. And Microsoft are trying to beat them to it. We've also seen VentureBeat trying to go after them as well. There's a few companies all in the running for this. And, Microsoft, though, has been on this big buy path. They tried to buy TikTok last year. They tried to buy Pinterest. So they're all in the process of trying to expand. And this is the mindset we have to sort of think about when it comes to Microsoft. They're now in a scenario where they want to be trying to do mergers and acquisitions and increase their product offering. So at some stage, the products are going to come through and they are going to be able to offload some of that cash and get a new product to amalgamate into the Microsoft side of things. So I'm bullish on Microsoft for quite some time. And even looking at some of the data, there are more people other than me saying that they are estimating a strong buy. Obviously, PE ratio is sitting at about 35, which is nice to sort of see. Book value sits at 17, good as well. And, you could consider these guys to be a bit of blue chip. But looking at it from, the bit of a longer term sort of guesstimates or even where we consider it's just one solid constant growth curve. That sits pretty nicely. So when I talk about and say in videos, good tech companies are still good, Microsoft is likely to be one of them. So I think that's, there's somewhere there's some sort of words of wisdom in sort of looking at that side of things. Obviously, companies like Netflix as well with subscription models are likely going to see continual benefit to move forward. But there's no reason to sort of not think about some of these good tech companies that have really good models, a good backbone, and plenty of cash on hand. Companies with good cash on hand who don't have the same exposure to interest rates and obviously inflation levels are really the ones that I'm looking at the moment from that side of things. Now, I think realistically that's most of today's sort of action. Aussie Dollar's not had a great day. You can see it's come up, tested my previous support line that we drew last week, and it's kicked itself back down. This is indicative. I'm now waiting for a touch at around this point to see if we can bounce back up this way towards the 78 cent range. So I'm still quite long on Aussie, but I'm just waiting for my opportunity now to get in again and look for that rally back up for us to deal with. So I think that's really most of today's sort of stuff. Outside of that, data around has been pretty encouraging. Don't let, whilst the encouraging economic data is there, don't let it distract you from, we still have a lot of progress to be made. When you take data that's come from such an abysmal hole of 2020, everything looks great. So please keep that in mind. I think we're still going to be seeing higher yields occurring throughout this recovery stage. And most of the risky assets, particularly in some of the tech companies, which are getting a lot of flow at the moment or a bit of flack, are still going to be able to get some good stuff. So, whilst it's in recovery at some stage, a lot of them are going to be able to handle it. Things like Microsoft are going to be able to handle inflationary problems without too much problem for them in terms of earnings, I don't believe. So, we're seeing that sort of continue to be the case. And it's about getting a bit of balance on that front. Now, I'm going to wrap up for this evening, but I will be around again next Thursday. I do hope you guys have enjoyed today's session and it's been a little bit informative for you all. Now, if you do want to get in contact with me, please feel free to message me on any of the social medias choices you can see on the top up here. Twitter, Instagram, my LinkedIn, feel free to add me and send me a message on there. Obviously, also on the YouTube channel. If you're watching from YouTube, then feel free to drop a comment for us. And of course, don't forget, you can catch any of the live appearances that I do, have a look at my book, do anything like that you like at any time. So I hope you have enjoyed the session. I will be back again on Thursday at 7 p.m. Australian Eastern Standard Time. So feel free to check in then. Hopefully we'll have a little bit more clarity on the current dynamics. But at the moment, we're really going back and forth each day from cyclicals to technology, depending on where yields are. So have a laser-like focus for those Treasury yields, and you will be fine. All right, bye for now and happy trading.